Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Alex Kholodenko, co-founder of Wealthy Mind Investments. Welcome to the show, Alex.
Yeah, thank you for having me. Glad to be here, George. Thanks for the opportunity to share my knowledge. My name is Alex Kholodenko. I'm a co-founder of Wealthy Mind Investments, originally from Ukraine, immigrated to United States 30 years ago, settled down in the Bay Area, and since then lived in Silicon Valley. My background has been in technology, working at startups and Fortune 500 large organizations, and was curious about real estate investments. Did not do very well in the stock market, did not get lucky with any IPO stocks, and the common denominator for many wealthy individuals that live life on their own terms has been real estate. So I was curious enough to have a deep dive into real estate, started small with single family home, and since then never looked back after found out about syndication and passive investing model. I started investing on my own, have done about 50 plus syndication as a passive and active investor, launched the company together with a friend of mine and my business partner, Ashish, and never looked back. Since then, we have done 3 years, since 3 years ago, we have done 15 investments. We have about 300 investors, and our business is growing, and it's a lot of fun.
Yeah, so I'm very excited to have you because you operate out of one of the paradigms that I find to be very interesting. You've got a fund of funds. So to help our listeners understand what that means, you can say maybe on the face of it, it seems like, well, there's a middleman, there's another layer here. Maybe I'm not getting such a good deal, but from my understanding and from what I've seen with these, you're actually generally able to get a better deal than you would if you go straight into an investment with another operator.
Correct. So you're absolutely correct. It's a different model. It's a different niche, and some people are not familiar with this, but many times we're able to negotiate a lot better economics for investors because we're investing a larger pool of funds versus if you were to invest 50 to 100,000 on your own.
Yeah, exciting stuff. So you were working for some startups. Definitely, that's a place to do it out there in the Bay Area.
Correct.
Yeah. Well, you also mentioned leaving your W-2 recently in the last year. I mean, I left mine about 8 months ago. Have you got any advice for people that are looking to leave their W-2?
I think you need to proceed, with caution. I think a lot of people do get excited, and I'm a big believer in burning the boat, but you have to be ready and get to the point where it's a sustainable income and lifestyle for you. So in my case, it was a long journey. I'm married. I've had a family and kids and high expenses being in the Valley. And it was definitely a journey. It was not an overnight success. So I've built enough income, knowledge, and expertise and partnerships and this business before I was able to have a lot of momentum to quit my job. So the advice that I would provide to somebody who is thinking about doing that is, think, plan, strategize, put together a business plan that has a roadmap of not just 3 months, 6 months, but a multi-year plan. Get mentors, get second opinion about it. I'm a big believer in a mastermind, and one of the reasons why I named the company Wealthy Mind Investments is that I'm a big believer in getting mentors and other people opinions about. Now, you don't have to be opinionated with other people opinions, but if you respect and have a mentor that you admire, and this is somebody that you want to emulate and to be, is you need to really listen to and share the business plan, because a lot of times you might have some blind spot and flaws that you might not be familiar with, and that will save a lot of time on your end.
Yeah, so that's some great advice. You want to be strategic and burn the ships, but first, plan. That's got to be one of the pull quotes from this interview. I love it. So, so you are operating out of a fund of funds model. and maybe just open it up. Anything else you'd like to tell us about that? Because it is different. I think a lot of people listening to the show, they're probably familiar with the idea of going directly in with a syndicator. But you obviously operating a choice, you can work with many through you.
Correct. Yeah. So the model was built in such a way that I was a passive investor for many deals throughout the last 8 years. I have invested in over 50 syndications.
Wow.
Through different crowd platforms, online platforms, some relationship, the people that I met at different conferences, and I've done quite well, but I actually did lose some significant capital also by investing in syndication as well. So after thinking long and hard, about 3 years ago, we launched the company Wealthy Mind Investments, and we wanted to position ourselves is by vetting out the operators, because ultimately you as a passive investor have very little control or no control at all once the investment is done. So the due diligence process that is involved in vetting out the operator has to be a very important step before you actually make a final decision to invest. I think a lot of people actually miss on that step. And in my case, because I was burned multiple times, I said, there's got to be a better way to do that. So I created a model where we vet out the operator. We visit their offices. We visit their facilities and assets that they operate. We check their underwriting model with our financial analyst. We have a mastermind session with our mentors before we decide, while we analyze whether we invest on a deal or not. We visit the asset before we decide whether we end up investing. We connect with local investors in that neighborhood, in that market, to make sure that there is additional validation checkpoint that gives us more confidence before if we decide to proceed on the deal. We run CoStar reports. We run background check on the operator to make sure they're clean. So there's a lot of work that we do in the background before we decide to invest on a deal. And if all the check boxes sort of get a green light and okay with us and our investor mastermind committee with our mentors, then and only then we decide to move forward.
Yeah, that's very valuable, because I'm sure that most people who are passive investors or thinking about becoming passive investors, I know it's very easy to just get excited about the deal and the market and forget to vet the operator, but that goes far beyond what I think most passive investors are doing. Do you share any of that due diligence directly with your investors?
Yes, correct. So if anybody is interested in having a deeper dive in some additional underwriting or reports that we have on needed basis, we're an open book. So we share that with some of the investors if they desire to do so.
Yeah, very valuable. And 50, I think that's a record for this show. I've interviewed people that have been in at least a dozen deals as a limited partner, but 50 is quite a bit. I have to say that vetting the operator is always the top bit of advice from all of the passive investors that I have interviewed. Anything else that you'd like to add to that?
I think you also need to make sure that not only you vet out the operator, but you understand the time horizon and the risk involved with the investment. A lot of times, a lot of people do not understand that. As part of building a diversified portfolio, we recommend to people to allocate certain percentage of their portfolio to real estate and have some liquidity in the stock market and other type of vehicles as well. So think of it as, sort of a baking a pie. And in order to have a beautiful and tasty pie, you need to have many ingredients. So real estate, it just adds another flavor to your diversified portfolio.
Yeah, I love it. So it sounds like there's a large amount of education component to what you're doing with your investors. That's very good. Valuable.
Correct. Yeah, so we host a lot of educational webinars. We bring in experts as well, such as CPA or other real estate investors, because there's so many different strategies out there. I mean, most of the people do not know the power of tax advantages and the power of passive losses. This is how I was able to quit my job, because I kept rolling my funds from one syndication and not paying taxes by reinvesting, utilizing passive losses to offset my capital gains. And once that concept finally was understood by me, the light bulb went on, and I was able to build a significant wealth and help other people along the way. Because for the most part, every day in my business, I just let people share the information, educate them about these different type of strategies, which a lot of people simply don't know.
Excellent. And what sort of channels are you getting your message out on? Do you have your own podcast, or are these webinars just going out through your newsletters, or are you getting out through some various other places?
Yeah, thanks for asking. So we do not have a podcast. We've been thinking about launching one, but we don't have one yet. We have a YouTube channel, wealthymindinvestments.com is our website. So we have also been interviewed on many podcasts in the past as well. And you can Google us, and we have a YouTube channel as well, where you can see some of the previous videos, recordings that we have done in the past.
Yeah, awesome. So checking it out over here, looks like you got 125 subscribers. So congratulations. I know it takes a long time to build to that level. Definitely be checking out those videos. So would love to hear more about the fund and how that works. What sort of check sizes are you writing?
We typically invest between 3 and 5 million per deal. As I said, you know, we do a lot of due diligence upfront on the deal. We turned out most of the deals.
Mm-hmm.
We do usually one deal a quarter. Sometimes we don't do any deals at all. Sometimes we do 2 deals a quarter. We're not desperate just to get into the deal because it's a shiny object type of syndrome. You know, we take this very seriously, and if we have a strong confidence in the deal and in the market, including the operator, then we proceed and end up investing.
Yeah, and then what about markets? I mean, on the one hand, I would think maybe you're entirely freed up. You're not operating the deals, so you could go all over the country. So are there particular markets that you're in? And if so, why do you focus on those markets?
Sure. Well, being in Silicon Valley, and for the most part, we have a lot of people that are local that are investing with us, although nowadays our investor base has gone nationwide and even international. We have some investors in Canada and Israel. And we focus on value-add opportunities that have a cash flow component involved. Now, not all our deals are cash flowing immediately. Through value-add opportunities, you need to force the appreciation and increase rent. That does take a little bit of time. But the prices in Silicon Valley and in expensive areas such as, you know, your New Yorks and Los Angeles and Seattle's are still out of whack when it comes to price per door versus rent on a monthly basis. So we focus on Sun Belt states, Southeast states. We target Texas. We've done a lot of deals in Dallas and Austin. We're actually going to have a deal soon, hopefully, in Austin coming up. It's a very hot market. We like Nashville a lot. We've done several deals in Charlotte. We ended up creating a partnership that took us many years with an operator that does a lot of deals in Florida, because we follow the jobs and migration trends, right? Ultimately, you want to invest in the areas where it attracts people. It attracts a lot of employers. It attracts more jobs, because that creates a demand for higher housing and the rents that are rising.
Yeah, exciting. So that's quite a wide range of markets to choose from. So yeah, a lot of growth out there, a lot of exciting markets. I'm in Florida, so love to hear about that. All right, great. So let's move on to what your ideal deal would look like.
Yeah, so the ideal deal would look like, obviously, the operator has to have a track record of delivering solid returns. We typically work with operators that have done a minimum of 10, ideally 20 full cycle exits. We like to work with an operator that has done several deals, including exits in the particular market, because each market is very unique. It has different ordinance, different laws, different eviction process, and all that. And we're following the trends again. You would like to see a strong job growth, strong rents, people moving in. And on a return basis, we're looking for 20% usually annual returns. We'd like to have some cash flow along the way as well, but not necessarily. Periodically, we do deals that provide even higher upside than 20% returns as well, because of the strong operational efficiencies that some of our operators partners have. We have about 5 different groups that we work, and we just keep rotating them and looking at different asset class and different targets, different regions of the country. Each deal is, slightly very unique, and I wish I can I can give you a simple answer than that.
Right, makes sense. So there's a range of deals that make sense. So may or may not have cash flow, but most of them do. And of course, there's so many operators, so many funds out there. The advantage, of course, coming through you is that you're going to give them a better deal than if they go to that syndicator themselves, but specifically out of the fund universe. So why would somebody want to invest with you? What makes Wealthy Mind Investments unique?
Yes, so that's a great question. So I guess the extra layer of due diligence that we provide makes us different in that regard, that we run background checks, like I was saying earlier. We visit the asset. I mean, most of the people are busy. They don't have time to fly to see the asset. Most of the people don't have the expertise to vet out the operator and do enough due diligence to make sure that they're investing with a solid, reputable company.
Right. Now, I'd like to help the operators out there, people who may be interested in setting up a fund or a fund of funds. You mentioned that you're writing check sizes in the multi-million-dollar range. In terms of what it takes to get a better deal than just simply going in directly and writing a $50,000 or $100,000 check, as many accredited investors would do, what would you say is the cutoff? Do you have to bring like $500,000 or $1 million? Where do most operators go?
That's a great question. So the typical feedback that we received is usually around $2 million range. Now, again, it's on a deal-to-deal basis. You might get a better economic even on $500,000, but it's rare. I have to be honest with you, because there's a lot of accredited investors that can simply writing $500,000 check on their own without getting any additional sweetener.
Yeah, good to know. And then setting up a fund, I would say, is sort of an advanced thing. So if I understand your career, so you worked in IT, you were in some high earning positions, obviously, and then you became a passive investor, 50 passive investments. Obviously, we're talking multiple cycles of investments. Now, did you launch straight into the fund of funds model from there, or were you doing something in between?
We actually did start in a 𝐀𝐥𝐞𝐝 model to begin with. So I think our first 2 or 3 deals, we have done 15 investments over the last 3 years, were 𝐀𝐥𝐝 model. And we simply switched because we wanted to work with bigger, more established operators. And more bigger established operators, they operate in the fund of fund model versus a 𝐀𝐥𝐝 model.
Yeah, exciting, and sounds like a great step up and natural progression too. If you like being a 𝐀𝐥𝐝, obviously you're starting out on the fundraising side. You have to stick around and do the asset management. This is something where you get to focus a lot more on the capital. And as you mentioned, you're also able to focus. I mean, when you're raising those large sums of money, then again, you can have the pick of the litter, so to speak, and find the best deals, best operators, and bring those amazing opportunities to people. So very exciting stuff.
Correct. Yeah. So it is a different model, but we do what we do best, which is, investor relationships. And we do provide ongoing updates and distributions. We just recently crossed another milestone. We paid out about $250,000 to our passive investors in passive income distribution. So it's an exciting stuff, and it is a scalable model. And by working with some of the largest operator out there, you have an extra confidence for your investors.
Okay, Alex, you've mentioned a few times in the interview the importance of having a mentor. I believe that even today you still have a mentor, and maybe you can tell us if you have any additional hints or tips or tricks about finding a mentor or how a mentor can change the trajectory of your career. I'd love to hear that.
Yes, for sure. I actually do have several mentors, and it's through networking and through stepping out of the comfort zone, not being shy, being uncomfortably comfortable by asking for help. I'm part of the mastermind. I credit a lot of success to a friend and a good mentor, Hunter Thompson. I am part of his mastermind. And being an entrepreneur sometimes can be lonely, and being surrounded by other people that are working in the same journey as you are adds a lot of advice, a lot of different perspective, a lot of successes as well. Being able to reach out to somebody who not only maybe 10 steps above you, but also somebody in the same journey as you has been amazing. I highly recommend Hunter Thompson Mastermind. There's been probably over 200 members of that mastermind, and I have partnered up on some deals with some amazing people and created good friendships with them as well. So do not underestimate the power of a mastermind and being surrounded by like-minded people, because the energy, the advice, the knowledge that you get is priceless.
Yeah, very powerful advice. Obviously, you're at a point in your career where you don't absolutely need a mentor, but still find a lot of power in drawing on that network and finding somebody who can help to push you to the next level.
Very true, because at the end of the day, real estate is a team game, and you're building the business, and the business is built on partnerships and relationships. So the sooner you understand that, you can scale and grow your company a lot faster.
Yeah, absolutely. Well, great stuff. But I think maybe it's time to head into our lightning round. Alex, you ready?
Yes.
All right, let's hit it. So tell us something about one of your real estate markets that most people wouldn't know.
Alabama, Huntsville, Alabama. This is the market that we're currently evaluating. We have not made a decision yet whether to invest in this market. Another one is Florida, Pensacola. There's been a lot of activity usually in Florida around Tampa, Miami, Orlando, but very few people know about the Pensacola and the other part of Florida.
Yeah, I love North Florida, so I think that's very exciting. I know that South and Central Florida, wow, prices are just nuts. But Northern Florida just hasn't quite seen.
Panhandle region is something that a lot of people don't know about it, and we're planning to evaluate one deal soon.
Yeah,
in that part of the market.
Yeah, very exciting. Yeah, don't count Florida out. It's not all overpriced. What is some advice you would give your younger self?
Get a mentor. I think I made so many mistakes and spent so many hours of just trying to figure it out on your own versus reaching out to somebody who's been there, who's done that.
What is the best real estate advice you've ever received?
Just get started. Start investing.
Okay, awesome. Now, I'd say real estate's also a place where there's a lot of bad advice going around. What would you say is the worst advice?
Worst advice, don't invest in something you don't understand. So yeah, there's a lot of good salespeople here, and do not get easily influenced. Really take time to vet out the investment.
Okay, good stuff. Well, this is where we take a nod to the randomness of the universe. I've got my random question cards here. So if you want, you can just tell me when to stop cutting the deck and we'll take something right off. Okay. All right. Top card. Which celebrity would you most like to see in person?
I love Tony Robbins. I've been a big believer, big follower of his for many, many years, and I would love to have a cup of coffee. I'm not sure if he drinks coffee anymore because he is a super healthy.
Yeah, and super high energy too. He doesn't look like he needs it, but that would be a great person to have coffee with. Can you name a book that's helped to forge you as a leader and as an entrepreneur?
I Think and Grow Rich by Napoleon Hill. It's a success Bible, and it's been I've reread this many times. In fact, I read every year on December 31 and do self-analysis. How did I do this year? What areas of my life that I need to improve on? And it's a Bible of success.
Yeah, I read it again and again. Amazing book. How has a failure or misstep set you up for later success?
In looking back, I'm always able to get up and have resilience and persistency in me. I feel like failure is just a temporary defeat, and being able to get up and move forward with it and analyzing, what I did wrong, makes me a better person each time I fail. And trust me, I continue to fail every day. Being an entrepreneur, this is what it's all about. You should not be afraid to fail.
Okay, now finally, could you give us a quote to help forge our listeners as leaders and entrepreneurs?
Yeah, so you're as an entrepreneur, you continuously create opportunities. So as Richard Branson said, opportunities are like buses. They'll keep coming. So you will create them over and over and again. And your job as an entrepreneur to present these opportunities to your customers, your investors.
Right, I love it. There's no one be-all, end-all deal.
Yeah.
Perfect. All right, great. And I would like to say, I want to make sure people know where to reach out to you to find you, so they know that they can find you at Wealthy Mind Investments. We mentioned the YouTube channel. Any other channels that you want to have people reach out?
You can reach out to me directly on my email. I'm pretty approachable. If you're just starting out, either as a passive investor or thinking about launching your own fund for syndication, happy to jump on a call and get you going. My email is alex@wealthymindinvestments.com. Thank you for having me on your show, George.
All right, well, thank you for coming and sharing your knowledge and experience with our audience. It's been great. Thank you.
Thank you.